Gold closed at around 2,985. That was the highest weekly close ever. And as I'm recording this podcast on Friday night, gold is up again, not above 3,000. It's up about $5, 29.90, so about $10 below 5,000. You know, the significant divergence between gold and silver, even though silver is, doing well year to date, did well on the week, it's still below its high price from 2020, where silver got above $35. So we're getting close to taking out that 2020 high. But what's significant is that gold is 50% higher than it was at its peak in 2020. Now, I think that's unprecedented. I haven't really, gone and looked at the history, but I'm pretty sure that there's not another period in time where the price of gold rose by 50% and the price of silver went down. That is a really weird anomaly that you're not going to see, because there is a high correlation even today, between gold and silver, very highly correlated. But to have a time period where gold rises by 50% and silver goes down, that really highlights how abnormal this situation is. And again, I think it's because the main buyers of gold are the central bank, and the retail public that would normally be buying silver, they're not active. They're selling. They're selling gold, they're selling silver, and some of them are buying crypto. But this really highlights how great the opportunity is in silver. I think gold's cheap too, but I think silver is a hell of a lot cheaper, and people, I think, should be focusing a lot of their precious metals firepower on silver, because I think it is going to catch up and get to where it needs to be when we start to get retail investors coming in. They're still missing in action. They still don't get it. And what I hear a lot of people say, the young people, they're buying crypto, so you should do what the young people are doing because they represent the future. They don't represent the future in that respect. Yes, the young people are the future, but when they're older, they're going to be smarter, and they're going to be more experienced, and they're going to have more wisdom. The idea that we should follow the investment advice of kids is farcical. I'd rather follow the lead of the central bankers. A lot of investors, when they look at the market, they look at insider buying and selling. Right? Why do you want to look and see what the insiders are doing? Well, because they generally have better information. They have a really good feel for the company. And so if you see insiders dumping stock in the company, that would make you think about, maybe I shouldn't buy it, or if I own it, what do they know? Obviously, they know a lot. They know more than I do. They work at the company. So if they're selling the stock, maybe you should sell yours. If they're buying the stock, if you see a lot of insiders buying, that could be evidence of, hey, maybe they must know something good's going to happen. Otherwise, they wouldn't be buying, right? So insiders buying and selling is considered a pretty good indicator of, whether or not you should be buying, because they have the best information, and they know the most about the company and have the best feel for, its future prospects. Well, what's going on with central bankers buying gold? That's really like inside information on the fiat monetary system, because they're at the heart of it. They're the insiders. The central bankers, are the insiders of the fiat monetary system. Buying gold is like selling stock, because they're selling dollars. So if foreign central banks don't want dollars, don't want treasuries, are willing to give up the 4% yield to buy gold that has no yield, that's a very strong indication that you should be doing the same thing. You should be following the lead of the central bankers, not millennials who are still living in their parents' basements. What the hell do they know? The guys that are at the heart of the fiat monetary system have a much better handle on what's going on. So you see the insiders in the fiat system dumping their fiat, dumping their dollars. They're not buying Bitcoin, they are buying gold. Now, they're also not buying silver. That is the opportunity for the retail investor to buy that silver. They're not buying it, not because they're not bullish. They just don't have a place to put it, right? That's not the monetary asset that they want. But the retail investor should be buying it. People should be calling up Schiff Gold, get on the phone tonight, fill up your shopping cart. Silver is going to explode. I hear people saying, gold, it's bearish. Look, it couldn't hold 3,000. I mean, it went above it once. I mean, you would obviously expect in a big week, gold up over 2.5%, that somebody would take profits at 3,000. It doesn't surprise me that there was some profit taking at $3,000 gold. What's a good indicator is that it even traded above 3,000, and the fact that it ended the week as strong as it did, and the fact that silver outperformed. But also, I like the fact that now we're getting the gold and silver mining stock outperforming. The GDX was up 6% on the week. That's the senior miners.
And look, if you're still on the fence, let me talk directly to the doubters, especially the ones who've been conditioned by 15 years of easy money to think that this can go on forever. It can't. And deep down, I think a lot of you know that. You know there's something very wrong when the Federal Reserve is still pretending inflation is under control. Even while housing is unaffordable, grocery prices have doubled and your paycheck feels like it's been on a diet. So let me ask you, if inflation is supposedly back at 2%, why are central banks still hoarding gold? Why are countries like China, Russia, Turkey, India, Poland, the so-called global south, stockpiling gold like there's a war coming? Why is silver being drained from Western vaults at record speed, while the media says nothing? The answer is simple. They know what's coming. They know that the days of the dollar's hegemony are numbered. They know that fiat currencies, not just the dollar but the euro, the yen, all of them, are being devalued in slow motion, and they're front-running the collapse. They're getting out while it's still possible to do so quietly. Now let's go back to silver, because this is where the opportunity still lies for regular people. Gold has already made its move. Central banks are in, sovereign wealth funds are in, but silver, that's still wide open for the individual investor. That's your chance to front-run the institutions for once. It's your chance to buy something real, tangible, and ridiculously underpriced before Wall Street wakes up to it. You know, people talk about asymmetric bets all the time in finance. Venture capitalists are obsessed with asymmetric bets. They want 100x returns from startups. Well, silver is your asymmetric bet in the real world. Not a startup, not a white paper or a roadmap. This is real atomic number 47 on the periodic table. It's been money for 5,000 years. It's used in everything from solar panels to electric cars to electronics, and it's in chronic structural deficit. The Silver Institute just confirmed another record shortfall in 2023. The third year in a row where demand has massively outstripped supply. And by the way, those numbers don't even include military demand, which for national security reasons is not disclosed. But we know from insiders, from engineers, from Pentagon sources, that modern missiles, drones, and surveillance tech use silver extensively. There are hundreds of ounces of silver in a Tomahawk missile. And those aren't getting recycled, folks. They're blowing up. That's silver consumption, permanent demand. So while the paper price of silver might say $28 or $30, the real value, the marginal utility of silver, is much higher. And here's the kicker. The price is being suppressed by the same banks that gave us the 2008 crisis. The same cartel of LBMA and COMEX bullion banks, JP Morgan, Goldman, Citibank, have for decades shorted paper silver far in excess of what actually exists. Why? To keep the illusion of fiat stability alive. Because if silver and gold go vertical, the dollar's credibility collapses, interest rates spike, the treasury market blows up, so they suppress the canary in the coal mine. But that game is coming to an end. You don't have to take my word for it. Just look at what's happening in the physical market. COMEX registered silver inventories have been collapsing from nearly 150 million ounces just 2 years ago to under 35 million ounces today. That's the lowest since 2017. Meanwhile, daily silver trading on the LBMA is over 2.5 billion ounces. That's more than 3 times annual global mining supply being traded every single day on paper. Folks, that's not price discovery, that's a con. But here's the thing, you can't fake physical demand forever. Eventually, the music stops. The paper contracts get called, the EFP, exchange for physical mechanism, breaks down. And when that happens, the price has to reflect reality. That's when silver reprices, not by 10% or 20%, but by 200%, 300%, or more. And when that moment comes, you're either in or you're out. You won't be able to get it. It'll be too late. Just ask anyone who tried to buy physical silver during the March 2020 panic or during the Wall Street silver squeeze in 2021. Premiums exploded, inventory vanished, and the smart money walked away with truckloads. This is why I keep saying, buy it now. Don't wait for CNBC to start talking about silver. Don't wait for Wall Street to greenlight the trade. Don't wait for your financial advisor to recommend it. By then, it's already too late. By the time silver breaks $50 and starts printing $60, $70, $100 an ounce, the public will rush in and they'll be the bag holders. They'll buy in at the top. You have the chance right now to be early.
I think that's going to be more obvious because if this is a bear market in the NASDAQ and not a correction, right? A bear market is down 20%. And if the NASDAQ goes down 20%, Bitcoin's going way down. Bitcoin's going to go down, double. Bitcoin's going to be, a lot below maybe 65,000 at a minimum, which means it'll be less than Michael Saylor's average cost for all the Bitcoin he's leveraged up to buy. But if the NASDAQ is in a bear market, if you look at the last three NASDAQ bear markets, the big one was in 2001, right? Following the tech bubble. NASDAQ almost dropped 80%. During the bear market in the 2008 global financial crisis, the NASDAQ was down 55%. And in the recent, very abbreviated COVID bear market in 2020, the NASDAQ was down 30%. Right? So the average of those three is actually 55%. So if this is going to be an average bear market and it goes down 55%, where the hell is Bitcoin going to go? I mean, it's going to get decimated. It's going to get obliterated. And not just this price, but the whole narrative, because gold's going to go up. If we're in a bear market in the NASDAQ, gold's going way up in that bear market. Now, if we don't get a bear market, or if the bear market gets cut short by the Fed, right, which I think is the only way that the NASDAQ's not going into a bear market, and the S&P for that matter. The Russell 2000 is almost there. I mean, we've moved down like 17%, 18%. So the Russell 2000 is going to be the first index to tip into bear market territory. But I think if we don't get the bear market, or we don't get a bear market, where we're down 40, 50%, it's going to be because of the Fed. It's going to be because the Fed comes in and rescues the market with rate cuts and quantitative easing. But if that happens, that's even more bullish for gold than the market's going down. And so even though gold is negatively correlated to the NASDAQ when the NASDAQ is falling, it's going to be positively correlated when it's rising. If it's rising because of rate cuts and QE, especially if inflation is still above target, which it will be. That's going to be the game changer. It's going to be that the Fed is going to be easing when inflation is above its target. That's never happened before, ever since they made up this 2% target. All of their easy money, all their rate cuts and all their QE, they've been able to get away with that under the pretense that, inflation is below target, and so we could do this. They've never done it when inflation is above targets. Now there's no excuse, no pretense. And I think there you're going to get a big drop in the dollar, which we haven't had yet. Yes, the dollar index has been going down, but you're still looking at 104 on the dollar index. It hasn't really dropped very much. We're at 103.7. So we're back below where we were when Trump was elected. So all of the Trump dollar gains have been eradicated. But we haven't really had a weak dollar. If Fed starts cutting, or when the Fed starts cutting and going back to QE, the dollar is going to get killed. And that is an environment where gold's going to shine much brighter. See, the gold's been strong even when the dollar has been relatively strong on foreign exchange markets. But when the dollar gets weak, which it is going to do, I'm convinced that we're going to see a much weaker dollar, then that is going to be very bullish for gold.
Now let's go deeper into why this anomaly between gold and silver is not just unprecedented. It's a once-in-a-generation opportunity staring you right in the face. You see, when you have gold up 50% from its 2020 highs and silver still below its 2020 high, you're not looking at a normal market dynamic. You're looking at one of the most obvious mispricings in financial history. And folks, if you've got eyes to see it and the courage to act, this is where fortunes will be made. Not in crypto, not in speculative tech stocks, but in good old-fashioned silver. Silver is like a beach ball being held underwater. And right now, the hand holding it down is made of paper, paper futures contracts, paper ETFs, and decades of monetary misdirection. But that hand is getting tired. Why? Because the fundamentals are changing rapidly. As I said earlier, gold is being bought en masse by central banks around the world. They're reducing their exposure to the dollar, to fiat currency, and to US treasuries. They're not interested in yield anymore. They're interested in safety. And if you're paying attention, that tells you everything you need to know. Let's break it down. You've got central banks, insiders of the global financial system, basically selling stock in the fiat system. That's what gold purchases represent. It's insider selling. Think about it like this. If you own shares in a company and saw the CEO and CFO dumping their shares on the open market, would you be buying? Of course not. That's the position the dollar is in right now. The insiders are selling. The people who know the most about the long-term viability of the fiat system are quietly, strategically exiting and repositioning into hard assets. And what are retail investors doing? They're buying the dips in Bitcoin, piling into speculative AI stocks, and doubling down on fantasy narratives like the idea that digital tokens are going to replace gold. It's delusion. Now I get it. Silver doesn't have the central bank footprint that gold does. Central banks aren't stockpiling silver. But here's why that's actually good news. It means silver hasn't yet had its run. It hasn't been crowded out. It hasn't been institutionalized. It's the people's metal. It's still flying under the radar. And that's where the biggest gains are found. Historically, when gold breaks out, silver eventually follows. And it doesn't just follow, it explodes. During the 1970s bull market, silver went from $1.50 to nearly $50 an ounce. In percentage terms, it outpaced gold by a mile. The same pattern repeated in 2010 and 2011, when silver ran from under $10 to almost $50 again, while gold went from $1,000 to about $1,900. The gold to silver ratio is still around 85 to 1, give or take. Historically, in times of monetary stress or crisis, that ratio shrinks dramatically, often to 40 to 1 or even 20 to 1. Do the math. If gold just goes to $4,000, which is very plausible in the next couple of years given the fiscal insanity in Washington, then silver would need to be $100 to $200 just to normalize with historical ratios. That's not a pipe dream. That's not fantasy. That's basic arithmetic based on over a century of data. Now you might hear the crypto crowd yelling, "But Bitcoin is the new gold." Really? Ask the central banks that have been buying thousands of tons of gold in the last few years. Are they adding Bitcoin to their reserves? Number. Are they repatriating Bitcoin from the New York Fed? Number, they're repatriating gold. They're building vaults. They're taking delivery. They're increasing transparency and control over their gold holdings. Why? Because gold is real. Gold doesn't rely on electricity, on the internet, on the next bull narrative to survive. Gold is universally recognized as money, has been for 5,000 years, will be for the next 5,000 years. And silver? Silver is the cousin that's been neglected at the family reunion. But it's still blood. It's still real money. And unlike gold, it's also an indispensable industrial metal. Silver demand is being driven not just by investment, but by industry. Solar panels, electric vehicles, electronics, medical tech. There is no green transition without silver. And unlike fiat money, unlike Bitcoin, you can't just print more silver. You've got to dig it out of the ground. And the problem is, we're not finding much of it. Look at recent supply trends. The Silver Institute reported back-to-back annual deficits. 2022 and 2023 saw demand outstripping supply by over 200 million ounces each year. The London Bullion Market Association and the COMEX inventories are being drained. Indian imports are skyrocketing. The physical market is diverging from the paper market, and the price discovery mechanism is broken. The COMEX is becoming a joke. We're seeing exchange for physical requests surge, meaning people don't trust the system anymore. They want their metal, not a receipt, not a promise, the actual bar. And that kind of pressure is building. That's the fuse. So what happens next? You get a short squeeze unlike anything we've seen. You get a rush into silver that takes it from $30 to $50 in weeks, not months or years. And from there, all bets are off. Once silver breaks $50, and it will, it becomes an entirely different asset class in the public's mind. Just like gold reclaimed monetary status in 2008 to 2011, silver will reclaim its monetary role in this cycle, especially when retail finally wakes up and realizes that crypto isn't the answer to inflation, to currency debasement, to systemic collapse. The real answer is hard money, tangible, scarce, decentralized metal. That's gold and silver. You want a decentralized asset? You want something that can't be printed, can't be censored, can't be inflated away. It's called a silver eagle, not a token with a dog's face on it. So what do? You act now, while the market is still asleep, while silver is still below $30, while the crowd is still chasing stories and hype. You build your stack, you accumulate physical, you buy quality mining stocks that are trading at laughable valuations, companies that can produce silver at $15 an ounce and will be printing money when the price hits $50 or $100. And don't just take my word for it. Look at what the insiders are doing. The people with the best information, the central banks, the sovereign wealth funds, the family offices, they're not buying Dogecoin. They're loading up on physical metal. They're reshoring gold. They're repatriating. They know the system is reaching the end of the road. The debt is unpayable. The deficits are permanent. The dollar's days as the world reserve currency are numbered. The Fed has no way out. It's trapped. Raise rates, crash the market, cut rates, inflate the bubble, and kill the currency. It's a lose-lose scenario. And when the world finally wakes up to that, you don't want to be in stocks. You don't want to be in bonds. You sure as hell don't want to be in crypto. You want to be holding the one thing that no one can print and everyone eventually wants. That thing is silver, and that time is now.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.